Hello, everyone. I'm Dr. Stock. I'm going to speak a little bit softly because it is late. Everyone else in the house, including the cats, are sleeping. I do want to talk about the CPI that's coming up on Thursday and some things that I didn't mention in my last video. Just a few details that I want to fill in, especially regarding some of the comments that I've gotten on my previous video. I appreciate you watching. I'm Dr. Stock, Doctor of Education. Let's get right to it. So what you see on the screen in front of you is the projected, given the month-over-month measurements that we have, if they stay consistent, which is unrealistic. However, it allows us to see how the year-over-year values play out over time. And that is something that I meant to mention in my last video, but I didn't quite talk about too much. So as we're looking at this, these are across the top of the screen. What we see are the actual values from November 2021 through November 2022, and then December's to be decided. And we'll find that at Thursday, January 12th at 8:30 a.m. So everything that you see highlighted in yellow, November, though that's actual. So we see the 7.1% year over year, and the 298.349 was the index measurement that we have. So over here with the month over month, what you see is the assumed month over month change. And so these are based on the typical values that these statistics say, not me. This is not my opinion. This is based on the evidence, based on what's put out there. There's very little of me in the last video. There's very little of me in this video. For the most part, this is as factual as I can present it to you. So year over year, assuming that it's negative 0.1% month over month, you can see that the CPI read that we would have for all urban consumers, this would be including food and energy, would come out to be 6.4% for December, assuming that we still declined at 0.1%, so negative 0.1% month over month measurement. When you look across January, 5.6, then 4.7, and these are still high numbers, but this is for values on inflation that are already baked into the CPI from the previous year, or from the buildup throughout the previous years, how I should say it. So even though we'd be dropping from the highs that we were at, so from November and then moving downward on a seasonally adjusted basis throughout 2023, you can see we're still above it all the way out until we get to about April at 2.8%. and at 1.7%. This isn't that I think that this is going to happen. I think that we're going to see still some volatility happening for us, especially where food and energy are concerned. We have a lot of macroeconomic considerations there. We still have Russia being sanctioned, Ukraine being a huge breadbasket, and Russia also being part of that. I mean, there's going to be disruption throughout the world. Supply chains have eased and a lot of those issues have subsided. But again, I can't stress enough, this is assuming, just so that we can see the trends that would take place if we had that negative 0.1% month over month. We would soon drop down to almost no inflation on a year over year basis. And then, well, it goes down all the way to zero by the time we get to August. And then it starts to normalize and rise back up until we get to November, where you see that annualized basis of negative 1.2%. And I'll show you after we get through all of what's here down in the next table. You'll see for 2024 that if we stayed at those consistent amounts, that the annualized values would come out. So, or approximately those annualized values. So something that I think is more likely is that we come out at even 0% month over month, or 0.1% month over month. So there's a lot of consensus out there that it's going to be lower. And so 6.5 to 6.6% is more what's expected out of the typical values that we have for the CPI historically, since I think 1947 is the year. All of these have been values that have been evidenced I think 5% was the threshold that I hit, that at least 5% of the time we have anything from negative 0.1 month over month to 0.6 month over month, and anything 0.4 or above month over month I think would be disastrous for the markets to start off, because it could be evidence that the Fed hasn't tightened enough, that inflation is not under control, and then that would push us more towards the 50 basis point adjustment following their meeting, which I believe is January 31st to February 1st. However, I do want to move on from here. Just look across 0%. So assuming that the CPI index itself did not change on a month-over-month basis for all of 2023, you can see that even then we're still hitting numbers like 5.85, 3.7, and we don't hit around that 2% until May, and even then it will continue dropping until it annualizes out to zero. So 0.1% would still be a positive thing. That still puts us under the target rate of 2% inflation per year. Eventually, it would get us there. Yeah, and so expect to see those high year-over-year readouts until we get over the inflation that we've already seen in the previous year. So all these numbers that are up above that I haven't really referenced too much, these actual values that we have, that's where a lot of the inflation happened. We had it, especially from May to June, I believe, was a big print for us. So when you watch that, these big numbers that we're seeing now are for inflation that has already happened, as the month over month is really where we want to pay our attention. And that's why my analysis focused on that, because that's going to be more telling for the direction that the Fed takes, and more telling for more recently what's happening with inflation. So just a quick look. This is kind of worthless to project out to 2024. The only value that I see is showing you what it means to annualize. So assuming that for all of 2023 and then all of 2024, we stayed at negative 1.1% month over month, negative 0.1 times 12 is negative 1.2%. And so that's what we have all across there. 0 times 12 months out of the year, 0%, we would have no change. And then 0.1% times 12, and that's where we get 1.2%. So that's what we mean when we say annualized. And so really, if we want to land at about that 2% mark, we want to be between 0.1 and 0.2%. I think that's something that would make the Fed happy and really be able to calm things down. If we were to get rid of some of the volatility and hang out there for a while, 2023 could still be a little bit bumpy for us. However, I think that inflation is going to come down. Recession, it's probably well underway, and I have some anecdotal thoughts on that would not be factual as per what's here. So I wanted to clear that up, because I had that in the last video, but I didn't showcase it, and I meant to. I was actually washing the dishes, and I was like, oh man, I never showed what it would look like across all of 2023 if we were to stay consistent on the same month over month basis for everything from negative 0.1 to 0.6. So anecdotally, looking forward from December into January, February, the party's over from the holidays. Thanksgiving happened, Christmas happened. And I think that, and again, this is anecdotal. These are feelings. This is not backed up by any sort of hard numbers or research that I have. So it's something I plan to investigate, especially as we get past this CPI. Right now, I'm currently working on PCE, which comes up at the end of January. I don't remember the exact date. For some reason, January 27th is sticking in my head for that release, but don't quote me on that one. In any way, anecdotally, I think that people are going to be reeling from the holidays and from the higher prices, and I think savings is going to be on their mind. I think January, February, where I also believe, again, anecdotal, that we see a natural pullback during those months anyhow. I think this month could be substantial, and next month, so January 2023, February 2023, it could lead to a very weak Q1 of 2023. And, those recessionary fears that we're currently in one, we might really, really see that come true. And hopefully that's something that influences the Fed and to make a decision to either slow their quantitative tightening, or just, pause it and just hang on for a minute, kind of let things settle before making further adjustments. So 25 basis point hike, probably, I think it's mostly baked in there already that it's going to be 25, at least as the markets are pricing in a 25 basis, pardon me, a 25 basis point hike. 50, I think, is pretty unlikely unless December gives us a big print, because January's CPI won't come out until after the Fed meeting, January 31st and February 1st. So December has to be good for us to lock in that 25 basis point hike. If December comes in hot in some unexpected way, that might really show us that 50% would be more on the horizon. The markets would suffer as a result. So be on the lookout for that. I'll definitely be watching. I'm excited to see how the historical values with that sort of negative bias, or that pull down that we have right now, with that sort of slowing the downtrend that we have in the data, to see if that's telling, to see if we land at about that 0.1% month over month that I expect. I would not be surprised to see it at 0.0 or 0.2% month over month, which would land us, just to put it out there again, anywhere from 6.5 to 6.7% year over year as that headline number. I better wrap this thing up, guys, because for me it's getting late, even though this won't publish until 8:30 a.m. On Wednesday. So you'll be watching it 24 hours potentially before. Well, I should say it would be released 24 hours before the CPI comes out. So, we'll wait and see. We'll see how the statistics hold up. We'll see what the numbers say. I will say a limitation to the statistics that I've done is that it only looks at the overall index. It does not look at the underlying values that make up the index. So not studying their patterns and their changes over time could be something that would have an influence on these numbers. And that's something that I hope to include in my next CPI projection that I would have for, what would that be? That'd be for January 2023, which should come out early to mid February. I don't have the calendar right in front of me. So anyway, I've gone on too long. I appreciate all of you who have stuck around this time to watch. Thank you for watching. It's excellent to be back to YouTube and sharing my perspectives with everybody. I'm going to get my Patreon fired back up. I'll blow the dust off of that, and I will start getting these this research that I've done. I'll start publishing that over there. If you guys would like to support the work that I do, then when I get that Patreon fired up, please come on and join me over there. And just it'd be nice to show your support, and it certainly makes things easier for me to spend a little bit more time when that support is coming from you. Thank you very much. I'm Dr. Stock, Doctor of Education, and thanks for having me back on YouTube, and I'll see you in the next video.